Okay, that's it. We're on.
And what is that for everybody?
What's
Happy
up, Luke?
Thursday.
Happy Thursday. How are you, man?
We have made it to Thursday. And happy new month. No, it's not a new quarter, right? Yeah.
It's not a new quarter, no.
All right.
Almost.
Yeah, but it's the first of the month.
I got to apologize, man. My computer is having latency issues, so I'm not sure if it's going to be choppy or not, but the information is critical. We have somebody awesome with us. Caitlin, how are you?
Hey, good. How are you?
Good. Caitlin, can you tell us who you are?
Yes, I'm Caitlin Miller. I am with Flyhomes Mortgage. We specialize in buy before you sell solutions and have partnered with Loan Depot to help y'all.
Not Home Depot, right? Loan Depot.
I say it as a joke too much to where now I say it for real. So it's a bad habit.
I always do Loan Depot, not Home Depot, right?
I know. It's terrible.
I do that all the time, Caitlin. All the time. Sometimes I do it on purpose. I'll say I call the leads. Hey, my name's Luis with Home Depot. You reached out and I'm returning your call. They're like, Home Depot does mortgage loans now? I'm like, yeah.
That's how I
got your attention. It's called a little pattern interrupt.
Oh, for sure.
Love it. What was cool? Thank you for jumping on, Caitlin. This was totally last minute, but I thought emergency broadcast totally fits the bill because today's rates are just amazing, and we dropped below 3.9 today on the 10-year. Is that right, Lou?
Yup, that sounds about right. That means that mortgage interest rates at 30-year fixed are below 10%.
Right. And right, exactly. I know. Come on, really, they're closer. Yesterday, I was quoting something around 6.1, and I'm sure today's at 5.8 or something like that. I haven't.
Oh, really? Well, I was quoting 2.5 yesterday. How do you like that? I'll one up
yesteryear, maybe. But this is a good time because what did Barry Habib says? Every percent drop in interest rates brings 5 million more people on the marketplace. And I was so amazed on Monday's meeting that we had with Caitlin, what there is to offer out there. So a lot of people own homes currently, and they're afraid to upgrade because they're afraid of selling their house or the time it takes to sell their house. They don't have the money to move over. And what Caitlin was offering was just amazing. So this helps people who have a home currently and are trying to get their home sold or in the process of thinking about that process and getting into a new house. Can you tell us more about the process, Caitlin?
Yeah, for sure. So we have a couple different programs, but you kind of hit the nail on the head in terms of what we're trying to solve for. But especially right now with rates dropping and people kind of realizing this is a good time to buy, they might not have thought that even last week. So homes aren't even listed or even ready to sell. It's oftentimes expensive, obviously, to move twice and to sell before you buy. There's that weird in-between period where you're like living at your mom's house on the couch or something. So this solves for all of that. We have a couple of different products. One just solves the DTI problem. So borrowers who are ready to buy that new house, they have the money for the down payment. They just don't qualify with both mortgage payments. We have a solution for that allows you to buy before you sell. And then another program called Instant Equity, which allows you to actually extract the money you need out of your home, your current home, to put down on your new home. So either way, it's solving for different things. They can also be paired together, but it helps solve all the problems that people have when it comes to buying before they sell.
And, when you were going over the program with us on Monday, you talked about three things that you guys provide. One was like the guaranteed deal. One was an equity program. And I think the other one was a loan program. Is that right?
Should I share my screen?
Love to. I just don't know how to do that, but let's see if we can. Is there a way
I'll give it a shot here.
Let's try it.
Okay. Hope I don't share like my Amazon.
Is wonderful.
Okay. Do y'all see my screen?
I do not see your screen on the screen. Let's see. Oh, here we go. How about this? How about if I do you see it?
Perfect. Yes. Everything's on the screen. So these are the three different programs we have. First is the guaranteed backup contract, which is by far the most streamlined and cost-effective solution out on the market today. It's $2,500 flat. This is the one that solves the debt to income problem that I mentioned. I can get into the details on that here shortly. The second is the loan. So this is a bridge loan on the old home that allows you to extract the money you need for down payment, closing costs, moving expenses, all the stuff that comes along with that. And then the last is kind of a standalone product, doesn't necessarily fit into the buy before you sell category, but it is a cash offer program that can turn any buyer into the equivalent of a cash buyer. So used in super competitive markets where we might be headed right now, to really stand out against other offers and have a super attractive offer.
That's really great. So you're basically telling, I'm going to offer you cash instead of having this 30-day contingency deal on my offer. Makes it much stronger.
For sure. And I can dive in if y'all are up for it for the guaranteed backup contract.
I like that one. Guaranteed. Okay, so what does that mean? I just saw 95% LTV right there. Go back to the other.
Oh, yes. This is that's the Flyhomes cash offer, the cash offer purchase bridge I mentioned.
Oh, okay. That's not okay.
I normally save that one till the end, but I can start there if you want me to.
No. It's all good. It's all good. Let's back up to the other one.
Okay.
Yeah, I want that guaranteed one. That's pretty hip. I like that.
Yeah. It all kind of starts with this one because if you're doing the instant equity program or a buy before you sell bridge loan, we require the departing residents to be under contract. And this is exactly what this contract does. So without getting too into the weeds, basically there's a guideline that states for underwriting to exclude your departing resident's debt, so the current home you're living in, even if you're saying it's listed, I'm planning to sell it, they still have to count that mortgage payment against you unless it is under contract and the contract's completely non-contingent. So really a cash offer. So we provide that. So even if you have the home listed, you're intending to sell to someone else, that's great. That's the goal. That's the plan for everyone. This contract is basically just used as an underwriting tool where we offer well below fair market value. So about 75% of what the home is worth. The intent is that you still sell to somebody else. You don't want to sell to us and we don't want to actually buy the home. It's just used to allow you to exclude that payment, all the debt, taxes, insurance, everything that's associated with that house. You can exclude it altogether. You now qualify for your new house. You can move in. You only move once. Then you list and sell your departing residence with your realtor just like you plan to. And then you have 120 days from the day that you close on the new purchase. So 4 months from the time you close on the new purchase to get a better offer than ours, which shouldn't be hard in this market. And then you just cancel our contract for no penalty.
Caitlin, when I was presenting to just a couple of realtors, everybody's like, oh, so these guys are trying to buy the houses for 75% of market price, basically. And that comes up, I'm sure, in your conversation with other people as well. You guys aren't in that business model. That's not your gig where you're paying cash for homes, right?
No, that's why we offer so conservatively. We don't want to buy the home. We can if we need to, but we definitely don't want to. We've done about 240 of these so far this year, and we haven't had to buy a home yet. Typically, people sell within 30 to 60 days.
So let's keep this Bay Area kind of specific because our prices here are Disneyland prices. They're crazy. Yeah. They're just in another world. Let's just assume $1 million, purchase price for my current home. Let's say my house is worth $1 million. You're going to give me $750,000 cash for it right now, so I can go buy my $2 million house down the street, and use my equity in my house basically to go there.
Hang on, you're mixing products together.
Okay.
We can do that with our instant equity loan that I'll get to next. But this contract works in the situation you just said, but only if the client has the money already that they need to close on the departing resident or on the new purchase. This doesn't give you liquidity. Just CPI, Lewis, go ahead.
Question. Okay, so what if $1 million is what the property's worth, and they have a first for $600,000 and a second for $300,000. So they owe $950,000 on this home, and it's worth $1 million. Can you still do that?
We would still offer the normal 75%. So we'd offer $750,000 on that property. We can still do it, but the underwriter, to actually be able to exclude the trailing residence debt, which is the whole goal, they would need to see that the client has assets to cover that, what was it, $200,000 gap. If they ended up having to sell to us, they could liquidate something and pay off the remainder of their mortgage.
Got it.
So in most cases, clients don't have an extra 200K laying around. So we need to offer enough to cover the mortgage balance. And we have some wiggle room most of the time. If it's close in your scenario, that's not close enough for us to increase it that much. But yeah, that has happened for sure. And they've been able to show like retirement assets or something to bridge that gap in a worst case scenario.
So Caitlin, what would be the max?
What's the max?
What would be the max? Yeah, like if
the max we'll offer on the home currently is $3 million per our guidelines.
Nice.
So you could do the math. So then that property would be worth $4 million. Fair market value, 75% of that's $3 million.
LTV wise, what would be the max you would?
I hate to say that. We've gone up to 82%. In situations to make a deal work if we were comfortable enough with the area and the home and all that.
Okay. So essentially, you're basically selling. You're telling me that my house is sold essentially, and I have some time after I buy this new house to move into it and put my house on market. And if it sells for whatever I want, that's great. I get to keep the proceeds, right?
Right. Yep.
And your contract no longer becomes. It goes away basically. So I pay you your money that you theoretically had paid me, and I walk away with my full thing. I'm getting a cushion of time essentially to close.
Yeah, that's right. I mean, you pay the $2,500 up front for the contract. It does its job. It's that underwriting tool that I talked about.
Yeah.
And then we pretty much are done with each other at that point, unless there is a worst case scenario. We really don't hear from you again until you say like, hey, I've got my home under contract. Let's cancel this backup contract. Yeah. So pretty hands off on our end, other than issuing this contract. The turn time on it's like 2 hours. So once you sign up and pay for it at the link that's on the slide, yeah, it's super quick.
And then this is how much did it cost? You said
$2,500.
Say what? $2,500. So this is the whole done deal to have my security blanket in place and go make offers on my new homes. That's insane.
For sure.
I love it.
Yeah, it works the most common situations are when you are working with your loan officer to get pre-approved and they realize you have the money to close on the new home, but you just don't qualify with the existing mortgage payment. You can sign up for it then so that you have a pre-approval that's not contingent on selling your departing residence. The other time that we see it used is when it's kind of more of a rescue situation. You're close to closing on the purchase and the contract you have on your departing residence falls through, or you just don't get one like you thought you would.
I could have used this about 2 weeks ago. We had a guy selling a home in New Jersey. Just his New Jersey home was already in contract. It was going to take, I think, something like another 12, 15 days to close. You guys could have done this in hours, I guess, like you're saying. And contract in place, and we could have just excluded his debt to income, essentially.
Yep, exactly. That's when we see it used more commonly. Unfortunately, it tends to be a rescue situation, but it can definitely be a plan ahead thing as well.
Well, I'm so glad we had this conversation. Okay, onward and upward. What's next?
Yeah. All right. What's next is what you alluded to, is being able to extract equity from the departing residents to put down on the new home. It's more common that clients have both a liquidity and a debt to income problem, not just a debt to income. So this is basically our version of a home equity loan. It can be used towards closing costs, down payment, reserves, moving expenses, all the things that kind of go along with a new purchase. It gets expensive. So it can be used for any of those things I just mentioned. It's meant to be paired with a purchase loan. So you're working with Luis and you're doing a purchase loan. You realize your home's not going to sell before you need to close on the purchase. So you start this instant equity loan also with Luis. And we can do it as a first or a second loan, or first or second lien. It is basically just extracting money before you sell. You still need the intention to sell the home because we require that it's under contract in order to fund this loan. So 95% of our clients who are using an instant equity loan are also using a guaranteed backup contract to solve for that piece.
At the same time, both pieces.
Yep.
Okay.
Yep.
Got it.
Pretty much everyone ends up using that. And if you're under contract on your own, great. And maybe it's just not going to close in time for when you need the funds to close on your purchase. Most people aren't under contract on their own and just use a guaranteed backup contract, but either one's fine.
What's the max LTV on this?
We'll go up to 90% combined LTV, so including any liens that are on it currently, any mortgages. The value we're using, though, is the value they're under contract for. So if they're using a guaranteed backup contract, remember that's at about 75% of fair market value. We're going up to 90% of that. So easy math, you can assume about 72 to 75% of fair market value for the LTV.
Got it.
Okay, so let's again bring this back home to somebody like me. Let's say I'm in a $1 million house, and I want to go buy my $2 million house. So you'll give me, and let's say I have $300,000 out on this house, right? So you'll give me up to 90% of the home value, so 60% essentially left over. So $600,000 as a crossover, right?
No, so here, let me do the math. $1 million home, okay? You owe, what'd you say, 300?
Let's say I owe 300, yeah, third.
Okay, so $1 million home. I'm assuming you're not under contract, so you're using a guaranteed backup contract, which is 75% of that. So we're offering $750,000.
Correct.
Okay, that's the value for LTV purposes.
Okay.
So we'll go up to 90% of that.
750.
So 750 times 90% is $675,000 is the max
combined
out that can be on the home. You owe 300. So our max instant equity loan is going to be 375,000 on that property.
That's my down payment for my new house.
Yep.
And I exclude the payments from this current house that I'm in.
Yep.
So I'm good to go.
Totally good. And there aren't any payments on our loans either. So your mortgage lender can exclude all the other mortgages and taxes, insurance, all that with the guaranteed backup contract. You're not going to have to worry about having a whole new payment in addition to your new mortgage payment. Rates 9.99%. Interest just accrues. It's simple daily interest that accrues, and it's due at time of payoff. Payoff happens when the home sells, just like any other mortgage would get paid off.
Okay, and then timelines. There's 120 days on the guaranteed backup one, or is it on this one?
So technically, this is a 12-month note, and you'll see that on all the paperwork and everything. It's going to clearly state 12 months, but I'm assuming you have a guaranteed backup contract. That home's going to be sold in 120 days, one way or the other. And when the home sells, our loan gets paid off. So even though it's a 12-month note, there's really no scenario that you would have it longer than 4 months.
And what happens if I do go over 12 months or 4 months?
They buy it.
Yeah, we'll step in and buy a house.
All right, cool.
Done. Mic dropped.
Yeah.
There you go. Okay, product number 3.
Yes, last one. This is not a buy before you sell scenario. It's kind of separate, but it's what turns a buyer into the equivalent of a true cash buyer. Perfect in the Bay Area. It could even be like a first-time home buyer or investment property, second home, whatever. There's no contingencies for financing, appraisal, or sale, and we can do it in as little as 10 days. So makes for a super attractive offer if you're in like like multiple offer scenario, or we've seen it win offers that are under asking because it is such an attractive offer. Basically, the way it works is you still work with your loan officer for your normal pre-approval. They do everything else from there. So they'll work with us to get what's called a cash offer letter that allows you to present what looks like a cash offer.
Hold on, Caitlin. Hold on. Lewis, can I get like an eye-popping sound? Where's your soundboard, bro?
Yeah.
What? So explain this one more time. So it means I can go up there and present my offer as if it was a cash offer then?
Yes.
Right.
Wow. Yep, with as little as 5% down. So we'll basically match your pre-approval letter. Whatever you qualify for long-term is you'll bring that normal down payment down to our closing instead of a long-term loan closing. And then once you close on the home, it's yours. Like Flyhomes never takes title. We're not one of the companies that like buys the home and sells it back to the client. They're presenting the cash offer.
Others, right?
You what?
BlackRock, Zillow, other companies that are buying neighborhoods. Okay.
Oh yeah. So you move into the home. The home is yours from day one. You're on title, and then you basically immediately start your long-term refinance. This is also a balloon note, same rate as the other one. No payments again. So you're not making any payments on this yet, but it's accruing interest. So you want to get out of the loan as quickly as possible. So you start your refinance right away. It's just a rate term refinance. So you're not having to bring any extra money to the closing table, other than closing costs, obviously. But you get into your long-term loan just like you normally would have.
And usually, Lou, correct me if I'm wrong, but usually if we do a rate and term within, I think, 6 months or is it 90 days of purchase, then it's a purchase rate price essentially for us, right?
Right, but no, this wouldn't even matter because we're still going to run that loan at the same time, right?
I would tend to think we run it consecutively, so we close probably 1 week or 2 weeks after the first one closes down. Okay.
Yeah,
So these are all basically short-term fixes for you're buying your house. Basically, we're just doing short-term loans, essentially.
exactly. Bridge loans, no payments. So it's super, super quick and pretty simple on your end too.
I love it. I love it.
I do.
This is so shocking that, I mean, you guys have been around for a bit. A previous colleague of mine was using you guys at Loan Depot about a year ago, but your relationship with Loan Depot is kind of new. You've been doing business for a while. So this concept of Flyhomes has been around for a few years, I think, right?
2018. Yeah, it's been some time for sure. The wholesale where it's available for lenders like yourselves at Loan Depot, that just started in January. But we've done about $7 billion in these loans so far.
Wow. All right, we got some comments coming in little by little. Good information. Let's see. Ojan is saying, I agree. And Norika is giving us a thumbs up. Thank you, guys. I don't see any questions in the chat yet. But so I love the guaranteed program. That I think that's kind of one of the coolest things I think out there. Have you guys been using that a lot? Has that been a consistent thing for you here?
Yeah, sorry, I was trying to go back. I'm so unfamiliar with this. Oh, here we go. Yes, the guaranteed backup contract is our most popular product because it can be standalone or used in conjunction with our bridge loans. So pretty much every bridge loan we do has one of these tied to it. But there's a ton of people who use it who just need this. They have the money to close on the new purchase. They know they're going to sell and they just can't get through underwriting with both payments.
Got it. And
So
you see a lot of stuff going on in San Jose area or Bay Area of this?
Say that again.
Do you see a lot of your business? Where do you see the majority of your business coming from?
A lot of California is definitely our biggest market. And Washington, a lot of that's because that's where we started, was on the West Coast. But we still see, I mean, pretty much all over. California is definitely our best state, though.
You know, got a question from one of our viewers. Norika is asking, how long do you need to be employed? I think, I'm not sure. Let me try to answer this. Is this, I'm going to say your Fannie probably, your guidelines, right? You're going by Fannie Mae guidelines.
Most of the time, yes. For the guaranteed backup contract, we do no underwriting, but for it doesn't matter. You're doing the purchase loan with your loan officer. We don't care. But for our bridge products, we're really underwriting to the long-term loan. So for the most part, our default is to go Fannie Freddie guidelines. But if you can show us, we care a lot about exit strategy and less about underwriting. So we want to make sure that this client can get out of our bridge loan. So if you have a non-QM product or any unique product other than a conforming loan, we're good with that. We just want to understand the guidelines and make sure that they can get out of our bridge, and we'll underwrite to that.
Nice.
Caitlin, what if it's one of the best loans in existence in the world, in the universe?
I know where this guy is going.
VA home loan, 100%. 100% financing, 25% guaranteed by the government. Who better than to guarantee?
Nice.
Who better than to guarantee 25% the loan?
It's nice. Yeah, we can do. So yes, we could do it if the long-term loan was a VA loan. Where you can run into problems is two things. One, the guaranteed backup contract does not work for government loans. for underwriting to exclude trailing residents that the home actually has to be sold. So guaranteed backup contract wouldn't help, but if they qualified for both payments, we could definitely do the instant equity loan for them to put down on the VA purchase. DTI though.
Are you thinking zero down, Lou? Is that where you're going with this whole thing?
Oh yeah, of course.
Yeah. I think we would need at least 5% according to Fannie guidelines, right?
No, I was thinking about the cash offer.
Oh,
the third product.
Yeah, we could do that. You would still want to make sure that a lot of the benefits that come from a VA loan are for a VA purchase. And by the time you're doing your VA loan, it's technically a rate term refi.
At that point, right. Wait, so well, let's see. Lou, you can still do a VA loan on this. Just with the down payment. Just with the down payment portion of it.
It would still work. Yeah. I know what you're talking about, Caitlin.
Okay.
So if it's a refi, yeah, the funding fee would be higher. But if a lot of veterans, they don't have that funding fee because of the service connection rating. So that would actually have not much effect. So
yeah. I mean, it can definitely work. I would want to review it on a case by case basis, but it can definitely work.
Got a couple more questions in the chat here. One of them says, let's see, what does this say? Investment, ratio requires for DTI on these.
Yeah. So instant equity, we really don't have, so that's the cash out loan. We're pretty dependent on you doing the purchase. So we don't care too much about debt to income ratio on that loan because it's guaranteed to be paid off in 4 months. We won't fund it until we can see that the purchase is approved or close to it. So that's what we're dependent on. So as long as you can do a purchase for them, we'll pretty much fund our instant equity. We don't care too much about debt to income there.
Got it. And then Norika also asking, let's see, self-employed LLCs, how many years active? Is it good for 1 year active business LLC?
Same answer to this question as the other one for how long they need to be employed. As long as you can show us that you have a long-term loan available to get them out of the bridge, we're fine. We want to understand those guidelines and make sure there's an exit strategy. But other than that, we're good.
I think those are the two key terms, right? Exit and short term. So these are always thinking about, we don't want Fly to be part of the mix for too long, right? Fly in, fly out. And, that's the exit strategy, right?
Yeah, I like that for sure. I'm stealing that.
So, Caitlin, on the first product, $100 million, $100 million, $1 million,
$1 million,
$1 million purchase price.
Yes.
Or value. Okay. So they owe 600,000 and you go up to 75%. So we can actually you can have $750,000 in first and second liens on this $1 million value. Okay. That's excellent. I really like
Luis, you got a fan out there. Alan Russell saying, always count on Luis to bring in the VA angle on this thing.
Yeah.
All right, cool. Finally, what about realtors? So I've been talking to a few friends of mine who are realtors, and they're like, "Are they trying to steal our business? What's going to happen if the home goes for sale?" You mentioned something in the presentation.
Ramin, they never think that. What are you talking
about? What are you talking about? I've never heard that.
Conspiracy here.
Never.
No, very common question. You're going to get it from clients and from realtors of what worst case scenario? What happens if I don't sell? We provide 2 pledges in those scenarios. And one is to the realtor. So if Flyhomes has to step in and buy it at that 120th day, we will. And then the home is ours now. Title transfers to us. But we will immediately relist it with that same realtor. So they're going to get their commission just like normal when they sell it to us. We will relist it with them so that they never get cut out of the deal. They know the home obviously in the market better than we do. So home listing is still theirs. We'll probably do a price cut to get it sold. It didn't sell in 4 months. And then the pledge to the client is once we get it sold, we will return 90% of the net profit back to that original client. So those 2 things really prove where
that's your worst case model.
That's worst case. I mean, that's if it doesn't sell in 4 months.
Yeah.
I mean,
Right.
if it doesn't sell in 4 months, you got to
Something else is the problem.
Something's wrong. Something is wrong.
Yeah, the realtor's the problem. Let's go.
I want to say one more thing about there's the quotable things. So look, we're not in it to screw the customer out of their deal or screw the realtor out of their commissions or whatever. I think a lot of these, I don't know why we have to keep defending ourselves on these aspects. I think there's been a lot of wrong turns in Albuquerque been made in the past, and I think that carries through to today. The real goal here is to help.
No idea what you just said. Can you?
Really?
It's like you said Albuquerque. What?
Right
What?
turn in Albuquerque. You don't watch Bugs Bunny.
Look, I'm ESL. Okay, so Spanish. Like you gotta slow it down because I don't understand.
Okay. So I think what I'm trying to say is that there have been some bad things happening in the past. I think the goal here is just to help you get to your end point. We're not here to try to make a quick dollar or take you in the wrong direction or take money out of people's pockets. Actually, we're here to help people put money in their pocket. For
sure. Yeah, the whole goal is to facilitate the buy before you sell process. And most people don't have a way to do it otherwise. And that's why we've created multiple different ways to do it, because everyone's different with their scenario.
Right. Norika asked another question. She was also again about reserves, I think. She's asking how many months reserves for asset bank statements are needed, or was a question on this one? I can't read that one. 12 months. No reserve. It's a Fannie guideline, right?
Right. No reserves are needed unless the long-term loan is going to be a jumbo loan, for example, that needs reserves. We'll follow the guidelines to that program, and we'll want to make sure they have those reserves so they can get out of our loan. But our products don't have any reserve requirements. And we'll follow, if you are trying to use a 401k as an asset, we do follow Fannie Freddie guidelines for that, unless, again,
50%.
your long-term loan has some other rule on that.
Got it. Okay. Very cool. Awesome. Dude, I can't thank you enough, Caitlin, for coming on. I thought this was a really critical piece of information to put out there, especially with the rates falling. And I think that after this weekend, probably there's going to be a lot of activity, especially with the Fed looking to cut rates in September. There's going to be a tremendous amount of activity in the marketplace now. And kicking people off the fence to selling their home and moving up is going to be an easier prospect at this point. So, for
sure. Totally agree.
All right, Lou, any backup, any follow-up on this?
No, I'm just waiting for my thank you. Like, are you going to thank me?
I'm always thanking you, Lou. Come on, bro.
Our Home Depot representative, right?
That's right. He's Home Depot. I'm Lone Depot. So, you know what? Next time I'm going to wear an orange shirt just to match up there.
As long as you have the little belt thing to go with it.
Right. Actually, I'm going to go to Home Depot today and get one of those bibs. That'd be fun. All right.
I dare you to.
I swear I'm going to do it right now, actually. Hey, Caitlin, thank you so much for joining. I know you're in Texas. It's like 6 o'clock your time.
Yeah.
So
really Texas. I love it. What part of
bigger go home, right?
Do what?
Go big or go home.
Yes, exactly. Everything's bigger.
Yup. What part of Texas?
Austin.
No way. I'm in Austin.
Yeah, the best part. You're in Austin?
It is the best part.
That's crazy. Yeah, it is.
I love it.
Lou is in both states at the same time. He's in California, and you come here like once every other week.
Yep. That's right.
Okay.
Yeah, everything's Bay Area. I'm still Bay Area.
Yeah. It's hard to change.
Yep. All right. Well, thank you, Ramin, for the invite. I appreciate you, Caitlin.
I appreciate you coming on, Lou. And Caitlin, thank you as well.
Thanks for having me. I'll talk to y'all soon.
All right. See ya. Thanks, guys. See ya. Bye.